All right, looks like it's probably settled for now. We'll go ahead and get started. Good afternoon, folks. This is Darren Coble with Versa Business Partners out of Magnolia, Texas. And we are a consulting and coaching firm for human resources, leadership, executive coaching. Want to welcome you to today's webinar for the commercial insurance consideration for small business operators and owners. We've got two folks from Dean and Draper organization. We have Brandon Eisenman from the W.E. Gibson Insurance Company. He's the managing director for the area in College Station, Navasota area. And then we have Angie Martinez, the director of employee benefits from Dean and Draper out of Houston. And both of these folks have over 20 years of experience in the industry each, and have volunteered to come and talk to us and just give us kind of the different insight and information that we need to remember as we are running our business in this type of an environment. So I'm going to go ahead and want to just remind you that these are being put on in partnership with the Bryan College Station Chamber of Commerce, the SBDC, Employer Flexible, and then Versa Business Partners. And so want to thank everybody for being here. And we'll go ahead, and Brandon, I'm going to go ahead and have you kick it off, introduce your organization and Dean and Draper as well, and we'll get started with the commercial insurance.
Sounds great. Thanks, Darren. My name is Brandon Eisenman. I am with W.E. Gibson Insurance. We're a division of Dean and Draper Insurance. Dean and Draper is one of the largest privately held insurance agencies in the Houston area. I am the director of our College Station division, which has the brand W.E. Gibson Insurance. Angie Martinez is with me, and she's in our Houston office and handles the benefits department. And so I wanted to briefly talk about what has been in the news, at least in my circles here and somewhat mainstream, and that is from a commercial insurance standpoint, what are the things that are happening? What are the considerations, what's happening with insurance as this pandemic takes hold of us or has continued to keep its grip on us. Without getting entirely technical, I'll say that the coverage that's been most in the news and the one that affects most people, most businesses rather, has to do with business interruption, also the official name business income insurance. And it has been a problem. It's going to remain a problem without a solution. And like I said, without getting into the weeds too much, business income is a property insurance coverage. And property insurance is dictated by covered causes of loss, i.e. tornadoes and fires and things of that nature. And those things trigger that coverage, that business income coverage, which is your loss of income as a result of a covered loss. The insurance industry has been and continues to be ill prepared for something like what we have in front of us here, in that in order to trigger business income, you have to have that direct physical cause of loss. And the whole idea of shutdown due to a pandemic, virus, bacteria, things of that nature don't meet the definition of a physical cause of loss like a fire or a windstorm would do. And so as a result, you have, if it's not a covered cause of loss on a property policy, it's not going to be a covered cause of loss as part of your business interruption insurance. And so, there are multiple angles that some of the, shall I say, the litigation has already started, and there are several angles that are being attempted to sort of circumvent this, calling things like virus, physical damage to property, but that hasn't got any traction yet, and it remains to be seen whether or not that ever will get any traction. So as a result, we find that your business income on the policy as it exists is largely going to be a denied claim for that very reason. There is no physical damage. There's some talk about whether, civil authority, like being shut down from the standpoint of a government, would trigger that coverage, but it's pretty clear in the language, at least as I've read it, that there still is that requirement that that shutdown be caused by a covered cause of loss, i.e. a forest fire or fire damage to something that causes that would trigger the insurance, and a pandemic is not. To make matters worse, back when SARS hit a few years back, most of the carriers saw this sort of thing coming eventually, although maybe not to this degree, and a lot of them included specific wording that denied coverage for outbreaks, pandemics, things of that nature. And so kind of the whole moral of the story is it is a problem without a solution. And I fully expect that the only solution we'll see is going to be in the deep pockets of the federal government to some degree or the other. I think the only thing that we've seen in our lifetimes that could compare with this would be, and it's on a smaller scale even, really, would be the 9/11 attacks, whereby we came up with a terrorism coverage that the federal government has went in partnership with insurance companies to reimburse for the cost of terrorist acts if you include that coverage and pay an additional premium on your policies. I wouldn't be at all surprised if down the road that's exactly what happens in this world. I will give some advice to business owners that have been affected by this, and that advice would be file your insurance claim nonetheless if you haven't already, if this is something that has impacted you. You want to see the insurance company give you a written response and verify that, this is coverage or this is not coverage. And, the odds are, I think, overwhelmingly good that it will be denied because of the reasons that I kind of outlined. But at the same time, if there is federal government money in addition to what's already out there that comes down the line from this, I wouldn't be surprised if it's contingent upon exercising your insurance option first and getting that denial. So once again, problem without a solution, not a lot out there in terms of what we do moving forward until the government has a role in this sort of thing down the road. And so that's kind of where we are. It's a little unfortunate there's not a silver lining to this thing yet, but we'll have to keep our eyes open, and news continues to come out every day about not only what might be done from the government level, but what sort of litigation may result from this. So that's about what I have as far as this goes, unless there are any questions.
But I think, Brandon, if you're okay, we'll keep the questions to the end and
Okay.
give time to think about it. But it's pretty insightful. I'll be honest, a little scary to kind of think that I think your word's a problem without a solution to be out there. And so I think we'll chew on that for a minute and shift gears to employee benefits. As we think about our employees and we think about our health benefits that we offer, the health and wellness benefits, Angie Martinez has volunteered to come forward and kind of provide us insight and different things we should be thinking about as we're working with administrators and just what we should be doing if we offer our employees benefits. So Angie, I'll hand it off to you and go ahead and jump in.
Okay, thank you. I just want to, say thank you to everyone that is on the webinar. It feels like we've been inundated with information surrounding COVID-19, and it just feels like every other email that comes through our Outlook has a topic about COVID-19. So we wanted to focus on some of the positive things that we are seeing with the COVID-19 related to the employee benefits. And so our focus today is to show you and go over a few of the resources that are available to employers and also to your employees. Your employees are your biggest asset, and you want to take care of them. You want to make sure that they stay healthy throughout this situation. Some of the questions that we saw come up as employers were faced to do layoffs, terminations, reduced hours, or furlough was, how do you handle the employees that have this reduction of hours, or they have been laid off or are on a furlough? So the question starts and goes back to your health plan. Most health plans have certain criteria that applies to the eligibility for benefits In the most cases, your plan allows employees to be enrolled on the plan when they meet the eligibility for being actively at work, and they also have to work a specific number of hours. In most cases, it would be 30 hours per week. So if you have employees that have been reduced or are not even working anymore, but they're still considered your employees, how do you handle that to keep your benefits in place for these individuals? So the carriers came in and they actually made a couple of accommodations for employers going through this scenario. A lot of them, for the most part, have relaxed their eligibility criteria. So again, this is where an employee has to be actively at work and work a specific number of hours to remain on the health benefits. They are doing it on a temporary basis for employees that are in this situation, and they're allowing the employers to make that decision. And for the most part, again, the carriers have relaxed this eligibility. Some of them have relaxed it through the end of April, like Blue Cross Blue Shield. Some carriers like United Healthcare are extending it through May 31st. A lot of this information, as you've heard, is subject to change. There's constant updates. So I would say it's really important for an employer to, remain in contact with their broker, the health insurance carriers, to find out if any of these accommodations that they put in place, if they will be extended. Another option that employers were given with some of the carriers was to allow employees that have previously declined coverage enroll on the benefits. So again, this is your individuals that are without coverage. The purpose is to have some type of coverage available for those uninsured employees. United Healthcare offered it through April 13th, which has expired, and then Blue Cross is still offering this special enrollment opportunity through the end of April. The coverage and for most of the carriers went into effect on April 1st. There's a couple of other ones like Humana Insurance. They were allowing an employer to add another plan. So let's just say you have a plan that has a $5,000 deductible, and that's the only plan you have for your employees. In an effort to keep costs down, Humana was allowing employers to add a lower cost plan, and those employees that were currently enrolled would be able to buy down to that lower cost plan. They're allowing this through June 1st. So this is something that, if you have Humana or you have one of these carriers, I would say it's worth, exploring to see what options are available to you as an employer, and then also for your employees. Another question that we did receive was, will there be a grace period for premium payments? And the carriers are allowing this, and we'll consider it on a case-by-case basis. As the medical carriers relax their eligibility for these layoffs, reduction of hours, or your furlough employees, the other carriers, we call them ancillary, and these are going to be the carriers that offer the life, the short and long-term disability, the dental, the vision. They have also relaxed their eligibility in order for you to continue coverage for these employees if you would like to do that. And these carriers have also announced that they will be offering a no rate increase for renewals that are coming up through May through August. Not all carriers are doing this, but some of these ancillary carriers are going to be providing a no rate increase for a period of time. The accommodations that I've mentioned are carrier specific. So again, I would recommend that you do consult with your broker or the carrier themselves for the details on how your actual plan works, and if they have expiration dates, how and when, is that going to be impacted to you. Regarding the terminations and continuation of coverage, when you're going through a layoff, somebody, loses employment, there's certain laws that may apply to that employee so that they can continue their health coverage. Some of you may know this terminology, COBRA or state continuation. When somebody is terminated or has a reduction of hours, it triggers a qualifying event, and that individual would have the option to continue their coverage for a certain period of time. When you hear COBRA, this is a federal law and will apply to employers that have 20 or more employees. For someone that's eligible for COBRA, they can elect to continue their coverage for up to 18 months as a general rule. There's other lengths of periods depending on the situation, but if you look at a termination or a reduction of hours, the employee and their covered dependents would have the option to elect coverage up to 18 months. The employee and the dependent, they generally pick up the full cost for the benefits if they decide to take advantage of a COBRA situation. So I mentioned COBRA applies to employers with 20 or more employees. But what if you have your workforce and you're below 20 employees? Texas has an option called state continuation, and it's going to look a lot like COBRA. The employee and their dependent would be able to continue coverage up to 9 months under the state continuation. State continuation applies to the fully insured plans. If you do have self-funded plans, you should contact your plan administrator because some of the self-funded carriers do not honor state continuation. So just be careful with that. Another thing to consider is, the impact of the Affordable Care Act and the employer shared responsibility. If you have employees that are layoff or furlough, but you still consider them an employee, think about how that impacts your reporting, your affordability. Those are very complicated questions. And if you hear me say it depends, it's because a lot of the responses will depend on that particular employer. And, the Affordable Care Act, the employer share responsibility as a general rule is going to apply to employers that are over 50 employees, with a lot of different factors that go into consideration. So now we'll move on to resources for your employees. There was questions surrounding the testing and the treatment for COVID-19. We'll start off with how the testing is covered for the COVID-19 under your health plan. With the Families First Coronavirus Response Act, which is the FFCRA, and the Coronavirus Aid, Relief, and Economic Security, the CARES Act, they cause changes to your health plan. Under the FFCRA, the health plans are required to cover the testing for the COVID-19 without imposing a cost sharing. Cost sharing could be a deductible, a co-payment, co-insurance, or even also requiring a prior authorization. So that's how the testing is now covered. It's going to be covered without any cost sharing to the member. Your plans, if you generally have like a PPO that has co-pays, again, you're not going to have any cost sharing. But what about the plans that have a high deductible health plan, also known as your HSAs? On your high deductible health plans, in order for the carrier to begin to make payments on your behalf, a member is required to meet their plan deductible before the carrier steps in. With the FFCRA, there were changes, and now the cost sharing is also waived for high deductible health plans. So the point is that everybody, wants to do the best thing for individuals that are impacted. The carriers, some of these laws that you've seen get implemented, it's for the purpose to help the population get the appropriate testing that they need and not have to incur additional medical expenses. So we've covered the testing. And now regarding the treatment for the COVID-19, again, in an effort to protect patients from receiving high medical bills. So if somebody is hospitalized in ICU, incurring high dollar bills at a facility, the carriers have stepped in, and a lot of them are waiving also the cost for treatment. These are also carrier specific. So for the most part, I would say the major medical carriers, the United Healthcare, Blue Cross Blue Shield of Texas, Cigna, Aetna, Humana, they have all jumped on the wagon, and they are going to be, waiving those cost sharing for the members. There could be some limitations for a short period of when they will be waiving this cost. For example, United Healthcare, Blue Cross, Cigna, and Aetna are waiving the cost through May 31st, while you have Humana that has not set an end date. So again, you want to check the specific with some of these details with the carriers, because what I'm referring to applies to fully insured plans. If you have self-funded plans, those are treated a little bit different. I would say just confirm with your plan administrator to find out if they also have some of these waivers in place. And some carriers are only doing it for in-network, while others are doing it for out-of-network. There's different types of consideration being made by the carriers. Another resource for your employees is telemedicine. Telemedicine is a consultation with a healthcare provider in the comfort of your own home. It's done usually, virtual. And this is a recommended resource because right now a lot of the population is not able to go in physically to see their doctor. And so this is an option for a consultation using a virtual mechanism. There's two types of telemedicine. The first one is virtual visits, and a lot of the commercial health plans already offer this virtual visit. They use preferred vendors. Some of you may recognize the name: MD Live, Teladoc, Doctor on Demand, Amwell. The virtual visit usually is covered, and you have a flat cost associated with the service. For the most part, it will be whatever you pay for a typical primary consultation with your primary care physician. If you have a high deductible health plan, they're also covered, and these plans generally you'll see the cost be between $45 to $60. So again, the virtual visit, a lot of your health plans already have this included. The other one is the telehealth. The telehealth has the same concept of the virtual visit, but the difference is with this type of feature, you're not limited to the preferred vendors that the carriers have, like your MD Live, Teladoc. With this feature, you can choose your choice of physician in network and have that consultation with that doctor. You can also have it with, if it's a psychiatrist, mental conditions, they have expanded to that level. One of the things to confirm as a member would be that your doctor, your physician, can handle a virtual visit, because not all doctors' offices are equipped with the technology to be able to do a live, a two-way audio. The visual communication has to be there. So again, members should confirm the specifics to their plans, and also, abide by any restrictions that they have. Staying in the network is always recommended. Some of the insurance companies are actually waiving the cost for the virtual visits or the telehealth for a limited time period. United Healthcare is through June 18, Blue Cross is through April, Some of the other carriers are also extending it and have decided that they will consider extending these expiration dates if, just depending on how things turn. If you have prescriptions that you need refill, some of the carriers are waiving it's too early for a prescription refill as long as the member does have a refill remaining on file with a participating retail or mail order pharmacy. The home delivery is also available for some carriers. So if members are, afraid of going into a pharmacy because of the coronavirus, they may want to look at home delivery for prescriptions. Those are being also considered by most of the insurance companies. A big resource is going to be emotional support for employees. A lot of people deal with the stress, anxiety that the coronavirus is bringing. You have individuals that have been laid off. They have a financial burden. They may have, they may be sick. They may have a loved one that has passed away from the coronavirus. There's just a lot of different impacts on population in the world because of the coronavirus. So the emotional support hotlines, these you may know them as EAP, Employee Assistance Program. And some of these features can be found in the health plans for the employer paid life, or if it's an employer paid long-term disability, short-term disability plan. A lot of the health insurance companies provide this free hotline to your members already. So you want to point these out to your employees. Check with your carrier to see if you have one of these EAP plans. If you don't, some of the carriers are still offering it to clients as long as you have a benefit with them. If you've checked and you do not have this feature on any of your benefit plans, a carrier that is offering a free hotline is United Healthcare for emotional support. They have this through Optum. It's open to the public. Anyone can call. It will provide members access to trained mental health specialists. The number to call is 1-866-342-6892. It's available 24 hours a day, 7 days a week, and they have indicated that they will keep it open as long as it's necessary. A few other considerations for employers is, see what's on the horizon. We don't know for sure how long we will be in the situation where we are having to do virtual meetings, so we don't have that physical contact. But employers should consider how they will continue their benefit administration. You may be handling your enrollments with paper today, and you may need to look at transitioning to a digital platform. Be prepared to be able to do electronic enrollment forms, your virtual open enrollment meetings, and an online benefit platform where your employees can enroll, make changes via a website or using their smartphone. Those are just things to consider. Educate your employees, let them know about the resource that they have available right now under their benefit plans. Encourage them to register or to visit the carrier's website because they have a lot of information specific to them and related to the COVID-19. And then also, think about your upcoming renewals if you have one coming up this year. How to start planning, if you have one health benefit plan, would you consider adding a second one to lower the cost for your members? If you only have a PPO, look at ways to bring in maybe a separate plan that's an HMO or a high deductible health plan to, again, lower your overall cost. And lastly, just some resources that we have. On our website, we have a COVID-19 resource center. which you will find a lot of the webinars that we have partnered with, and also FAQs related to just various topics on the COVID-19. We've tried to keep our clients informed on the impact, the compliance, reminders of action items, due dates, things like that. So you're welcome to reference to our website just for that additional resource. I know I've talked a lot, but that's pretty much my recommendations for employers today.
No, that's great, Angie. And again, you're highlighting the employee benefits side of the house, and I think folks oftentimes in companies I've worked at in the past take for granted the complexity that exists around an employee benefits plan, and when you start to release or provide that benefit to folks. And can you tell me a little bit about the relationship, like the Dean and Draper, that you have with your clients that you host or you administer the benefits plans for? How does that relationship work?
So we are a consultant to our clients. We bring solutions, and with the employer, we look at what's their goal, their budget, the demographics of their employees, what plan's going to work for them, what are they looking for in a benefit, what types of programs do we need to put in place to help them with their goal to, benefits is the second largest expense on an employer's P&L. And so that tends to be a targeted area to try to control that cost. So at the end of the day, we do want to be a partner with our clients with the overall goal to help them control the cost. And so we'll do marketing, we look for the carriers. Again, employers rely on us for our advice on which carrier is going to be a better fit for them. And then also, other than the benefit piece, what else comes with it? If it's an employer that has 25 lives, we know that that employer should be offering COBRA. So then we have the compliance section also that we want to make sure that the employer knows what they have to comply with.
Yeah, and to that point, you've got a lot of great resources. You mentioned the website. I've got it on the screen for those online that are watching this live or after. But the www.deandraper.com/COVID-19-updates is a great resource page out there. And then they've got anything from an HR toolkit to posters that you need to post, and it's a great resource. I visited it and recommend if you get a chance to get out there. Employer Flexible's got similar resources as well. You'll see an email come out from them thanking the attendees and the registrants for coming. But yeah, it's a great resource, and that information was extremely helpful, Angie, to just start thinking through the complexities. But then if an employer has a benefits plan already, who should they reach out to? Can you remind me who they should reach out to in case they have questions about reduction in hours or those kinds of things?
So the employer, it's going to be a various resources. So regarding their benefits and what they are allowed to do, I would say they should start with their broker, because their broker will have a lot of insight, as we're providing for our clients on what to do with your benefit plans. And, as they're going through either a reduction in workforce, that's important for a broker to know, because we've got to know what approach we're going to be taking when this client comes up for renewal. There's the rates are generally based on a couple of factors. You could have how many employees you have, how many are on the plan. So if that starts changing, and those are things that impact your rates, it's important for us to know that ahead of time so that we can have those conversations with the underwriters. And then also, paint the story that, does that employer intend to staff up again? Is this temporary? And those are considerations that will be important to the underwriting.
Mhm. Thank you. What if one of my employees got contracted COVID-19, and should I contact my broker? What should I do? And if one of my employees or their family members who's on my insurance plan, is there anything special I should think about doing?
So, employers should, follow the guidelines that are available through the CDC. As far as on your benefits, it's a slippery slope. I would say consider, how this will impact the rest of your population. There's HIPAA laws involved, so you want to be careful in how and what information is released to the rest of your employees. But I would say they should definitely start with the insurance. The member should start with the insurance carrier, because the goal is for that member to receive the appropriate treatment.
Cool. Very cool. Thank you. Brandon, you had mentioned, as it relates to commercial insurance policies and programs, you mentioned the 9/11 and how this is kind of a parallel incident. I'm putting words into your mouth, so correct me if I overstate or misstate. But you mentioned 9/11 was an example of what happened. Can you walk us through what happened after 9/11, given that insurance plans at that time didn't have a solution for that type of incident and that type of catastrophe, and what happened with?
Sure, loosely. It's been many years, but in essence, it started with litigation, because there was on property insurance, commercial property insurance, there tends to be an exclusion in there for large losses that are somewhat uninsurable. War, in this particular case. Nuclear damage is another one. So, as it relates to the war exclusion on property policies. And so the first bit of problem came along in that the carriers were, at least one with the World Trade Center, were saying that this was an act of war by a third party, and therefore it was excluded under the standard property policy under that appropriate exclusion. And that sort of led down this rabbit hole of determining, well, if in fact it was war, what do we do? What do we do in a case like this? How do you get coverage for something that's uninsurable? And it became clear somewhere in the months and years that ensued that the government was the only one in a position to offer that sort of coverage, or at least to partner with insurance companies to provide the financial backing to offer that sort of coverage. And we don't see that just in the case of terrorism. We see it, we don't talk a lot about it, certainly not in our area here because we're not highly prone, but we see similar things in the world of other catastrophes, flood being one of them. Most flood insurance is actually underwritten, and the financial backing is provided by FEMA, which is a government agency, because insurance companies don't feel like they can generate a profitable profitable business by offering flood insurance at the cost that it would take that most could afford it, whether it be from a commercial or a personal side. The same applies to, in Texas, we have a state program called the Texas Windstorm Insurance Association. And there are 13 counties along the coast that insurance companies virtually refuse to provide weather coverage for because of the higher risk of catastrophic loss from hurricanes. And so Texas has a program that provides that coverage that you buy into. So this isn't new. Whether it be federal or state, government intervention in these things whenever losses are not largely payable by insurance companies because they refuse, either whether they don't understand the mechanisms and the pricing that is required to offer that program, or it's just so large and wide sweeping that it would cause financial calamity in insurance and widespread insurance company default if it were a coverage that had to be provided. So this isn't a new thing. That's why I expect that we'll come up with something that would at least partially provide the coverage that we need with some sort of federal backing. That's kind of the long and short of it.
Sure. So if I'm out there and I've encountered just to refresh on your advice or the direction that you recommend, and now just folks, just to be clear too, Brandon, Angie, myself, we are not attorneys. We are not on the legal side of the world. So take our direction and commentary as it's meant to just be there as a piece of information that can help you. Always seek advice of counsel for litigation type situations or those types of situations. And so, Brandon, if you can revisit the recommendation to file a claim, and you had recommended that business owners, first question, what type of policy would I file a claim against, or should I hope to have?
Right. So the insurance policy at play here would be commercial property insurance. Often small businesses have some sort of package policy where they have their liability and their property insurance kind of all wrapped into one policy. But if you don't, and so you contact your insurance broker or the carrier directly, whichever you prefer, and you file a claim against, it's going to be on the property portion of that policy or the property insurance policy directly. And so that's the policy that's involved. And again, the reason is twofold. One is there is at least a chance some carriers out there may have some coverage for something like this. My guess is it's going to be very, very limited if there is any. And in all likelihood, there won't be any at all, just based on what I've seen to this point. But the other reason is you want to have that denial. You want to have a written response from the carrier explaining to you if there's not coverage, why there's not coverage. And then you want to also keep that handy along with anything else that you've got, from loss of income, receipts and things of that nature, in case that federal or state or whatever money comes along to reimburse, at least in part. You want to have all of those things in place so that you would be able to participate.
Great. That was, we had talked about that earlier as we prepared for this, and I think that was a really good advice or insight to think through to try and get ahead of the curve as far as to be as prepared as you can. And Angie, you had mentioned that the high deductible plans as it relates to COVID-19 testing. So we have a question on that. Can you repeat your advice as it relates to high deductible plans and how COVID-19 could impact a high deductible plan as far as it relates to getting tested for?
Yes. So the testing is covered at no cost sharing for the member. So usually on your high deductible health plans, the member, for example, if you have a deductible of $3,000 on your health plan, on these types of plans, you're on the hook until you get to $3,000. And so the members cost sharing on the COVID-19 testing, they're waiving you having to meet your deductible or to also have any co-insurance if your plan has co-insurance or any type of co-payments. So the testing itself is going to be covered as a general rule at 100% with your high deductible health plans. Again, this is on your fully insured plans. If you have self-funded, I would check because fully insured and self-funded plans are a little bit different, and where one is mandated, the other one may not, but with some of the cost sharing. But on the actual testing itself, fully insured, if you have copay plans or a high deductible health plan, they are waiving the cost sharing for members.
Okay. And to clarify between fully insured and the self-funded. The self-funded, you mean basically me as an employer, I basically pay a fee for the broker or the administrator, the Blue Cross Blue Shields of the world to do the paperwork. But if I get a bill for all of the health charges. What is that?
So fully insured is what you see more traditionally for employers, you know, especially if they are below 50 employees, where you have your set premiums, you pay the Blue Crosses, the United Healthcares, they handle everything. There's not really any administration on the employers when it comes to the claims. When you have self-funded, it's different. The employer has a specific deductible that the plan pays on behalf of the employer, and then there's administration for the specific deductibles, and then also just to handling your claims. So it's more of a risk for the employers when you're self-funded, because that employer, you know, you're on the hook for a certain deductible on whomever is covered on your benefit plan.
Very good, thank you. Angie, do you have any other final thoughts on benefits?
Just, you know, for just employers to really look at, you know, all the research that are available just from different, you know, carriers, vendors, different resources, and, you know, really to pass it down to their employees would be my biggest recommendation. Show the positive of what the carriers are doing.
Thank you. You know, Angie and Brandon, I want to thank you both for coming today and sharing your insight and your information. And then from the W.E. Gibson Insurance Group, a part of Dean and Draper, and then also Angie, yourself from Dean and Draper as the Director of Employee Benefits for that group. Those listening or those reviewing the recording, make sure that if you have any questions, you can feel free to reach out to Angie and Brandon. If you have any insurance needs or you know, wanted to get an idea of what another firm could do, I personally am really impressed with the resources, the interaction with these two, but then also just the resources that they provide through the information in the COVID-19 website on Dean and Draper's website. So please be sure to check them out. And then special thanks to Jennifer Davis with Employer Flexible for being available for us. And then also to the Chamber of Commerce for Bryan, College Station, the SBDC, for also helping us get the word out. And you know, the website to register for the next webinars are on the bottom at versabp.com/COVID-19-webinars. Thanks again for joining. Brandon, thank you. Angie, thank you very much. And really appreciate your insight. And want to wish you guys a great afternoon. Thanks for joining.
Thanks for having me.
Thank you.
Appreciate it.